All right, now let's look at WION's monthly global economic and markets health check to see what happened in March. This is a quick roundup. Now, broadly, commodities rose while digital assets and the dollar fell. And this was driven by differing bets on US President Donald Trump's tariff headlines almost every other day through the month. Bitcoin has crashed over 20% from its new record high hit on Trump's inauguration day in January. For the month, the OG token was down 1.7%. Gold was the biggest beneficiary in March, hitting multiple record highs to breach the $3,100 for the first time. The yellow metal is up about 18% this year in a run that's seen it clinch at least 15 all-time highs. Crude oil rose as supply fears returned after Trump's secondary tariffs on Venezuela and the threats of oil penalties on Russia and Iran. Bitcoin and the dollar took a beating from the escalating tariff wars as well. Moving on to the Asia-Pacific stock markets, a recovery in emerging market stocks was a distinct theme last month. Chinese and Indian stocks closed in the green, showing signs of a recovery amidst market mayhem. But the Japanese Nikkei and the Aussie index fell 4%. The Nikkei sank to the lowest level in more than 6 months on the last trading day. In the Americas, frustration and fatigue hit stock traders on Trump's tariff rhetoric. The S&P 500 ended March nearly 6% lower, making it 4.6% in the red for the quarter, its worst performance in 3 years. The tech-heavy Nasdaq slumped over 8% last month to post its worst quarter in nearly 3 years. And this comes ahead of a historic test of the U.S. export model from Trump's tariffs expected, which are, of course, as we know, set for the 2nd of April. On Wednesday, that is, which Trump calls his Liberation Day as well, the reciprocal tariff issue will be front and center again as the president is set to unveil country-based tariffs in the Rose Garden. Brazilian index was an exception, showing a solid recovery of over 6%. After closing out February in the green, European stocks took a hit last month. Stocks across Europe fell, with the Ukraine peace deal showing no signs of being signed anytime soon. The French COCA was biggest loser in the region in March, followed by UK's FTSE and the German DAX. In Europe, the boost from increased defense spending is being overshadowed by tariff threats to the growth outlook as well. Now let's turn our attention to the overall economic outlook. Let's just take a look at the Asia-Pacific region to begin with. Trump's trade war worries have weighed on the outlook for global economies. While India is still expected to be the fastest growing major economy in the world, bets are for a significant slowdown. The biggest worry is a fall in demand, which is weighing on sentiment for India. The outlook for the rest of Asia also remained negative. For China, the outlook is still mired in doubts from trade war worries and the recession in its real estate crisis. In the Americas, the outlook for the United States, Canada, Brazil and Argentina shows trade tariffs are likely to hurt economic growth. And for the US economy, recession bets are back on the table, with Goldman Sachs calling for a 35% chance. The economic activity expectations in Canada, Brazil and Argentina were also cut. On the other side of the Atlantic, the negative outlook seems to be more widespread. The UK and other European economies will likely avoid a recession, but expectations show the clouds are darkening again. The outlook for African economies also negative.